Second quarter GDP plummeted 51% quarter-on-quarter on seasonal adjusted annualized terms in the second quarter of the year. And it did not come as a surprise as it laid bare the impact of the hard lockdown on the economy. And this was also the back of the second quarter Business Confidence Index, which declined to a low of 5. However, it seems as if though in the third quarter there's an improvement in sentiment. Can you take us through some of the details?
Sure. So business confidence has now improved, rising by 19 points to 24 index points. This is an impressive improvement, but very much in line with the easing of lockdown over the third quarter, which means we've seen a resumption in activity and more possibility for business owners to conduct their business.
And was there differentiation in the sectors? It seems as if the retail was one of the more shining stars.
Absolutely. So retail seems to have come to close to its historical average of 33 points. And we think that this is partly because of an increase in demand, also because your consumer is now allowed to buy so much more. Under hard lockdown, there were restrictions on across most of the retail sector except for the necessities, food and pharmaceuticals. Now you can buy clothes, hardware, furniture, and such like. So we are seeing this improved demand, which leads to improved retail activity and thus sentiment. On the flip side, though, we've seen that construction continues to remain quite weak. It's also seen an improvement in confidence. However, it's at historical lows relative to previous years. And this really is in line with the trend we've seen in the construction industry, which has contracted for GDP for 8 consecutive quarters. So we think that this will continue to be the case. It is seeing improved activity, but it's actually still quite weak.
Very nice details there, Siobhan. And so just looking forward, what does this print mean? And also if we just think about that the continued easing of the lockdown will definitely continue to benefit sentiment, but there's obviously also concerns around the return of load shedding. What can we expect and what does this mean?
So what this print means is that we're going to see an improved GDP print for the third quarter of 2020. This will also not be a surprise, the extent of which is still going to be quite difficult, and we are in quite a volatile period. But we do know that activity relative to the second quarter is going to be better. As you mentioned, load shedding provides such a constraint that we're not sure how it's going to play out in the fourth quarter and going forward. This is definitely going to present a challenge to increasing activity substantially in the economy. So it does kind of create a bit of a dampener in that respect. However, we are not without opportunities. If we see a renewal in infrastructure projects, we could see improvement in confidence for building industry. You could also see, as tourism resumes in the economy, that something like the motor trade industry, which has seen a massive decrease in demand for passenger vehicles from rental companies, could see a further bounce back.